so dumb and so stupid that it's working. Like, okay, that's where I should be putting a lot of my money. And that's why like the S&P 500, right, continues to outperform, right? It's like the simplest idea. We're gonna take the 500 largest companies in the US and we're just gonna invest in them. The best performing stock of the last 20 years, do you know what it is?
No, what was it?
Number one performing stock of the last 20 years is Monster Energy. Monster Energy is the number one performing stock. This is clearly an industry that has stretch PEs that can grow, and people will still keep coming into that stock. Your biggest asset is time. Your only regret in life is that you didn't do it sooner. So whatever you're looking at doing, like try to get to that point sooner than later. Our whole life kind of came crashing down, and I got this feeling that it really doesn't matter how much money you have. If you can't keep it, it does not matter.
Investors, welcome back to another go-round of Masters of the Market. I am incredibly excited. Here with me today is Gab Blacksburg. He is the man, the myth, the legend behind Wolf Financial, the CEO himself, and also a major host on Twitter Spaces, all things investing. So Gab, first and foremost, I want to welcome you to Masters of the Market. Right off the bat, throw out the first question to you. How in the world did you get started? What's your background? How did this whole Wolf Financial founder and CEO business start up? Just give us your background.
Yeah, absolutely. I am 25 years old right now, based out of Baltimore, Maryland. I went to Drexel University as you did, and I studied finance there. I think for me, the passion for finance, a little bit of a crazy story. I'll make it a short one. Back in 2008, I was only 10 years old, but all I had known was pretty good life. My dad was a doctor. And then 2008 came around. He had made large investments in real estate and everything changed. Our whole life kind of came crashing down. And I got this feeling that it really doesn't matter how much money you have. If you can't keep it, it does not matter. And that just stuck with me for several years. Eventually went into finance at Drexel, great opportunities, co-ops at Goldman Sachs, at Versa Capital Management. And I came out kind of in this area. I was like, all right, I want to do finance. But things took a little bit of a twist because COVID hit. And as COVID hits and it's all right, well, is a typical job the best thing here? Is work from home good? I actually started working at a startup with a couple of other API guys from the crew. And our idea was, we are almost graduated. And to be quite honest, with a finance degree, the school has not actually taught us how to invest. They've kind of beat around the bush, right? They've done a DCF class, they've done this, but like how to build a portfolio and be an investor was not actually taught. And we're finance. And so we were like, all right, we need to build something that'll offer people this. So we started working on an app, simple app. The idea was we're going to create a social environment for people to talk finance and learn. That started flourishing into the next level. And next thing you know, we're kind of talking as competition for a stock with a public, other areas like this. But before we even knew it, there was new opportunity to be had. And we ended up splitting into two companies. Those guys spinning out, building a really awesome product. I won't go down the rabbit hole now. And me deciding, hey, I love this world of finance and educating, but I don't want to do it through an app. I want to do it live. I want to talk with people. And so kind of became a full-time Twitter Spaces host. I was the first person to do that ever as a job. And I got hired by Twitter as a contractor, helped them build out the product. And then over the last few years, I've hosted over 5,000 hours of live investing discussions, trading, everything on those lines, made some great connections, talked with Elon Musk. And here we are today. I now run a marketing and media agency for finance companies. I run an investor relations firm for publicly traded firms. And I've got a few other ventures up my sleeve.
Wow. Really, in a nutshell, I got to ask before we get into all the investing related questions, what was it like talking to Elon Musk?
Dude, crazy, crazy, crazy. So we just, we didn't like plan to have Elon on, right? And we're in a little bit of a different place now. So Elon Musk follows my account now. We've engaged. Like if Elon commented, this would be like, holy shit, Elon Musk. But it'd be like, okay, cool. This first time, Tesla at this point, I don't know if you remember this, this was December of 2022. It was dropping hard. And Elon was selling, right? He was selling to finance the purchase of X. And the market is dropping, dropping, dropping. And so we're doing Tesla spaces daily and thousands of people are coming. And we're just like, what is happening here? Is this a good time to buy? Is this a good time to sell? And we have this space open. All the big Tesla investors who have big profiles on X are in the space having conversation with us. Next thing you know, Elon's requesting. And he pops into the room. And our room went from probably about 2,000 people to about 60,000 people listening. So my heart literally just goes out of my chest. It's just beating out of my chest. I don't know if I felt adrenaline like this before. And all of a sudden he's on stage and it's like, cool, it's question time. And we just start grilling him. And thank God we had a great panel up there, good people to talk with him. I asked him some questions about how Tesla and X would interlace to basically create more shareholder value. He had some good answers to that. I asked him some other questions about some things that he was doing with the platform. But yeah, it was cool. He came on for a full hour. Apparently, he was on his jet flying somewhere to another meeting. I just had time to spare. And it was a cool opportunity. And, I've engaged with him since, had some conversations. But yeah, crazy, heart beating out of my chest.
I wish honestly we all get that lucky. Maybe we can all jump onto Twitter Spaces and
Yeah.
see if we can catch some luck there. For those of us who don't know of Twitter Spaces or have never checked into it, can you give us a rundown of what exactly it is and how it works for investors?
For sure. So most people are familiar with Clubhouse. They've seen it at some point in the last few years. And Spaces is literally just the Clubhouse technology built right into X. So think about it as a live podcast. When I go in on X, I can open up a space, which is literally just a podcast, essentially. I'm talking with other people that I can bring up on stage as a co-host or as a speaker. You can have two co-hosts and 10 speakers at a time on stage. And you set a topic. The beauty to it is because it's built into X, whenever I open one, all my followers can see it at the top of their timeline. It shows up as like a little bubble at the top. They can click it and come right in. There's no video yet. They said that they're going to add video actually in the next couple of months. So really taking this potentially the next podcasting level. But the beauty to it is it's all live. There's recorded spaces. You can go and listen to recorded space. I think most people don't. I think they listen to it live. But the idea behind spaces is something happens in the world. We've all known that Twitter or X is the fastest place to learn about it. I mean, literally, if you're watching on TV and something interesting said, somebody has probably already tweeted about it before you get to Twitter. Like people are just live conscious stream of thought. And now that can be brought into voice. So, as an example, when war broke out in Ukraine, we were live on spaces talking about semiconductors and investing in them.
Wow.
Immediately, the first tweet happened. Oh, Russia has shot a missile into Ukraine. We switched the space over and we became a Ukraine is being invaded space. And we were literally the first before any TV show, before any reporter,
Wow.
we were live already. So that's kind of the beauty to it.
Would you say this is the hangout for investors?
Oh, there's so many people that do this throughout their day now. I think we've moved into a podcast era officially. I think
Sure.
that they've become huge, and so many people who maybe used to listen to just music are listening to maybe 50% of the time podcasts, 80% of the time podcasts. Music has become more of a social thing with other people or a workout thing. But if you're just sitting at your desk at work, sometimes you just want to listen. And so having these stuff, it's like an endless feed, right? It's like your favorite podcast, but it's there every moment, every day, pretty much because people are just always live.
Sure. And if I wanted to send all those who are listening in right now to this Masters chat over to Twitter Spaces to hear you, Gob, where should I send them? Is there a handle or how do we
Yes.
navigate through it?
That's the beauty is they just can come right to my channel. So you just go on to Twitter or X, you type in wolf underscore financial. That's the handle. So wolf underscore financial. And you'll actually see, I try to make it super easy. On my page, the pinned tweet, so my top post is actually always a schedule for the following week of all my spaces. So usually we have about 20 to 30 different scheduled ones on a given week. And so you can just come in, take a look at it, see exactly how many there are, what times there are. You can scroll through it and set reminders. So when we open the space, you'll get a notification. We make it super easy, but that's the place to go.
Investors, I want you to take note of that because Gav is the man to go to for all things investing, a lot of insight. And speaking of which, we're about to jump into all of Gav's insights right now, right here on Masters. So the first question here I want to throw out to you, investing related, Gav, is what type of investor would you consider yourself? And perhaps you've started some time ago and you've had now a lot of experience in the investment world. Have you changed strategies? Give us a rundown of how you've been investing.
Yeah, I've definitely changed strategies. I've been investing for around 7 years, but I've really actually had serious money to invest with over the last 2 to 3. And so you find yourself changing as an investor as you have more capital and more opportunities, right? In my first years when I was creating these portfolios, to be honest, it was very much the way that I think most people should get started investing, which is buy what you use, right? I was coming in there and I was buying like Snapchat and Google and Apple and just all this stuff that it's like, cool, I use their product every day. I like it. Walmart, Home Depot, and I was just adding those to a portfolio. That was my first several years. Once I started to get more capital, I started to build out more developed strategies. For right now, I've created the base strategy, which is, I think, something everyone should have, which is a DCA approach to fulfilling your retirement accounts. So that's kind of the start to it, right? I have a solo 401k, I have my own business, but most other people might have their own 401k. And then I also have a Roth IRA, and you can do backdoor Roth, whatever you have to do there. And the way it works right now is money is taken automatically halfway through the month out of my account, X amount of money. It gets put into this other investment account. And then over the next 30 days, it gets DCA'd into a variety of some specific stocks, but mostly broad-based index and ETFs that I like. And it just goes in over the course of 30 days. It goes into the tax advantage accounts first, then into the other accounts. And after 30 days, the next sum is pulled and it's distributed. This is great because it means that I don't even have to think about it, right? This is on autopilot. Doesn't matter. Market goes up, down, sideways. I'm always adding to it. And the benefit of that is, of course, compounding, right? The only major regret that most people have in life is that they didn't start sooner, is my belief. I think it's like everything else can be worked out, but time is invaluable. And so start sooner, give yourself more time. Either you'll learn a mistake or you'll have a win to celebrate, right? One of the two, either way, it's good in my opinion. On top of that, once you have your base structured, that's when you can decide how much risk you want to take based on your age. I'm 25 years old. I have a 60-year investing time horizon, so I can afford to go out and take stabs. So for me, that's a variety of areas. I've got a crypto portfolio. I have a growth stock portfolio. And I probably have a little bit too many names in these at this time, but I try not to put more than 5% of my portfolio into a specific name, unless it's a broad-based index and ETF fund. I try to really, go after what excites me as well. My boring investments are already in my base. These investments are the ones that are exciting, right? And where I see opportunity incoming. I know we're going to cover some of my favorite stocks as we get into this, but hopefully that gives a good picture of like, I'm very big on build your base, automate it, get that out of the way, get your retirement accounts done. Once you're next on top of that, start taking risks based on your age range. And for me, as a young person, I'm heavy on growth. I'm heavy on crypto and those other areas because I have the opportunity to be so.
Yeah, what I love is right off the bat, there's a lot of insight there, which of course begets a lot of questions then on my side. And you have a fair amount of time already of experience investing, and you've shared that you've changed investment strategies over time. Have you made mistakes already, like earlier on, that you've learned from? Because as you just shared, I mean, it sounds like you have a strategy that is set, it's cemented, and it's working well for you. But was it always like that since the beginning of your investment journey?
Yeah, I've made two big mistakes in my opinion. The biggest mistake that I made was not understanding that if it's too good to be true, then it likely is, right? And I think that this is something that all types of people learn in one way, shape, or form throughout life. And this really hit me hard during the crypto staking area because I luckily got into Bitcoin really early in that 2020 cycle. I mean, I was buying Bitcoin at like $5,000, $6,000 a coin. And so for me, I was like, great, this is really working. I was buying Ethereum cheap too, and I was definitely making money on them. But then I started going into these higher risk areas such as staking. And as I was looking into staking, I was like, this concept seems great. People are borrowing, there's supply demand. People that are borrowing are willing to pay a higher APY. But I should have looked at it and been like, all right, well, why can't they just go to the bank? Why can't they just do this? Why would they be paying this high APY? And eventually these things came crashing down and I had money that was in place. And, I took significant losses on those areas because it was all either sudden, right? Your shit just got locked up that day, or it was, hey, this coin's crashing. And you're like, well, are they going to get it back? Are they going to fix this? Are they going to stop? Stay steady, lads, right? And so I think for me, that's something that I always tell people nowadays. And I'm glad I took my licks so that I can educate others, which is if you don't know where the yield is coming from, you are the yield. And
Wow.
that is kind of a big lesson that I put out there to people. It's like if it's too good to be true, it is. There's no you shouldn't look at something and invest head over heels because it's too good to be true. If you're investing head over heels, it's because it's the opposite way, right? This is almost like so dumb and so stupid that it's working. Like, okay, that's where I should be putting a lot of my money. And that's why like the S&P 500, right, continues to outperform, right? It's like the simplest idea. We're going to take the 500 largest companies in the US and we're just going to invest in them. What? That's so basic, right? But like, yeah, it works. And so that's kind of a piece there. Number two is not having patience as an investor and not allowing things to develop. And even as a trader, right? There's so many times where I've gone in and traded an option and taken 10, 20% gain, and then it goes 500%, 1,000%. And this happened with stocks too, and different pieces that I was holding. And you get in your head, you're trying to weave in, weave out. Oh, I bought this yesterday and It's already down 5% today. I should just cut the loss, right? And understanding that things take time. And I love this comparison that a friend of mine made because sometimes people are like, well, if I put in ultra research and I invest from six different angles. He told me, he's like, if you have a woman and it takes 9 months to get pregnant, having nine women doesn't mean that it now takes 1 month for the child to be born, right? It doesn't work like that. You can't squeeze a child into nine different areas. It has to incubate and take time. And the same thing with investments. Just because you come at it from 10 different angles doesn't mean you're going to get rich in 10 times as fast. You have to incubate, let it take time, and be patient. So those were my two biggest lessons.
I love it. Where do you think this, what I always like to say is get rich by Tuesday type of mindset comes into play? And, is it because we lack, financial education? I mean, you spoke about it earlier, right? Like you didn't learn through school. So it was really then through experience. Where is it that we're all falling short that it seems like we all have, definitely at the beginning, these trigger fingers to buy, invest, trade, and it's sloppy trading most of the time.
It's because of the era that we live in, right? When you think about it, 20, 30 years ago, people had no choice but to buy and hold. They couldn't buy and sell the next day very easily, right? They had to maybe get on a phone call. They had to email, or email wasn't even around for a lot of this, right? They're writing letters to people. Hey, I want you to buy this, sell this, stuff like that. Or they're just having someone who's a professional do it for them in most cases. Now we've had this movement of freedom and this movement of pushing forward. And it encourages everybody, you can take the reins, you can be the investor. And that's great. I'm all for the empowerment of people. But what it doesn't teach them is you don't have the same experience that these people had for years. And in front of you, you're now being put these shiny buttons, right? Like Robinhood. They actually probably got sued over this, probably a couple times. But if you go back to those 2020 days, they were using so many mind tricks to get people to make another trade, to make another purchase. When you went to a stock, it showed the button just to buy, but to sell, you had to click a second button, then click sell. Whenever you bought a stock, confetti would shoot up on screen. But when you sold the stock, there was no reward to your brain, right? All these little gists that they would implement to make it seem like you should be doing more, 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 more. And as people didn't have the education. So I think it's exactly what you said. It's easier than ever. It's simpler than ever. You're mentally being pushed into doing it. And at the same time, you don't have the experience that people did that they were doing it 20, 30 years ago when people just give their money to someone and kind of relax a little.
Do you think there's a way to train, in patience? Like it seems like you have something down pat. What's been your
And
experience with patience?
the best way for me to train patients is to have the separation of those accounts. It's to have exactly what I said, the base account. My base account, max that I will check it is once a week. That's the most that I will check. And even that, I know it's like some people go, oh, it's a lot still, right? Like I get it, yes, but like I'm in this zone where I'm on a computer and everything's at my fingertips. And like max, I'll check that. So my trading account, it's up every day. I mean, I'm live on spaces, I'm talking to people. I probably have two trading accounts, to be honest, that I have up every single day, checking every 5 minutes, going back and forth. But the majority of the money, the base, it's in a separate account. It's not getting looked at throughout the week. It's just separating things out and just putting it in a different place. So you're not going to walk in. To be honest, it's the same thing as imagine if you're on a diet, right? If you're going on a diet and you're like, okay, well, let's put the chocolate chip cookies up in the cupboard so that I only see them once a week. And let's put the celery right in the front door of the fridge. So when I open the
Sure.
fridge 6 times a day, I'll see that first. That's how you have to like rewire your brain.
Sure. No, it's fascinating. Now, when you talked about your portfolio, briefly in the beginning, a little bit here and there, you were sharing, about the Roth 401s. Can you talk to us a little bit? Where's the vast majority of your money? Are you day trading with it, or is it tucked away in a safer account in that separate account you're talking about?
Yeah, definitely not day trading with large part of it. Gosh, so I probably have, I mean, I think I basically just put like maybe 5 to 10% into an account. And I was like, that's what I'm going to trade with. That's what I'm going to be super active with. Maybe a little bit more, maybe 15%. But yeah, most of it. So, first off, a lot of the money right now, because we are at the end of the year, is sitting in a money market account waiting to pay taxes. I will say that, it's earning 5%. It's waiting to go to the government. That's where a lot of the good portion is. Outside of that, the bulk is going to be in that base account. It's going to be in the Roth IRA, in the solo 401k, in the index funds, in the ETFs, broad bases, because even though I am young and I can afford to take risk and everything, I still understand that for me, I'd rather have some slow growth with the majority of it, and have peace of mind and understand that I have time on my side, than take, the big jump in and throw 50% of it in a trading account and trade zero DT options with it. That's not what I need to be doing. And even when I'm trading, I'm not the most active trader. Now, part of that is because I think there's been this misconception shown to people that, trading is easy and you could just jump in and it's, some people are getting lucky and stuff like that. The best traders that I know clearly spend the most time charting, learning,
Mm,
educating. One of my favorite traders, I call him Mans. His username is not Mr. Manzel. I mean, this guy is just a beast on the charts. The weekend, you can hop in. He does like YouTube videos and live YouTube streams for his audience, and you just watch him chart, just charting, charting, charting. All right, here's our next setup, and it shows, right? Because when he gets on the chart, this is like the biggest retail problem. They get in and they're like, "I bought, cool. This looks like a good spot. What the frick do I do now? Like, where would I get out of this trade? Where would I start to take profit? Where would I fully take profit?" They have no idea. But people that are going in and doing the homework, they're like, "Cool, profit target number one, profit target number two. All right, I'm all out here. Here's where I would cut to the downside." And they just all have it mapped out beforehand. And so it's just like any other part of life. And me personally, I run 5 different companies, do not have time to sit there and do a million hours of charting. So for me, my trading, it's very light. It's entertainment, right? It's doing it on spaces, hoping making a little bit of money here and there, engaging with my audience. But I know that I'm not a full-time day trader because I just don't have the time for it.
would you recommend that investors start there day trading? I mean, I've heard a lot of investors started in day trading, lost a lot of money. I myself, I started with ETFs, right? I'm a more risk adverse guy, but there's a lot of money that can be made in day trading, but we often hear of a lot of investors losing a lot of money in it.
90% plus lose. So your odds are stacked against you right off the bat. So unless you're putting in 30 to 40 hours a week, no, I don't think it's a good place to start. I think if it's a job, right? The people that are
Sure.
successful, 1 to 10%, it's the ones who actually put 40 plus hours a week in and use it as a job. They don't jump in for like an hour a day and call it quits. Maybe after 10 years they do, right? When they have that knowledge, but not at the beginning. No. So people, I mean, I think very much there's two easy ways to get started. One is with ETF and index funds, and the other is companies that you regularly use. Those are both great starting points. Now, the companies that you regularly use is not a perfect area by any means, because maybe you order stuff off Wish, or maybe you go to AMC theaters, right? Like there's a lot of companies that people use that are not good stocks, but it allows you to start building that base. And as you learn the principles of investing, especially fundamental analysis, you can then use it to tweak that portfolio and implement things and say, hey, I really like this company, but now that I understand fundamental analysis, let me go look at their free cash flow, or let me go look at their PE ratio or something like that.
Sure. Kev, where did you learn all of your financial and investment wisdom? Was it through trial and error and experience, or was it through reading? Where did the bulk of it come from?
I think that the bulk of my initial education came from that co-op at Goldman, and just massive credit to them for what they do with that program, because you are absolutely expected to know what you are talking about. You're getting on calls. I mean, you're literally a week or two in expected to be answering the phone and talking to billion-dollar plus clients. And there's no way that they'll let you do that unless you know the answers to the questions. And so I think coming into that, I didn't even know. I think like I remember one of the big things for me was bonds. I knew nothing about bonds going into this co-op. Like I was like, cool, yeah, fixed income, the 2 year and the 10 year, great. I had to put a 30-page presentation together that I had to give to the people running the co-op program. I knew everything about bonds after that. I spent like weeks on this thing, just digging into all the research that they would give us. And then same thing for equities, right? I do that deep dive on equity. Same thing for real estate, for alternative investments. They made us go into these areas and like, definitely put a little pressure if you didn't know what you were talking about. And so I think for me, that was the first time I was in a zone like that, because school's different. Like, don't get me wrong, I love acing classes. I graduated with a 396 summa cum laude with honors distinction. So I definitely took my school seriously. But at the same time, you can take it seriously, do the test, and then forget everything right afterwards. It's a little different when that work environment comes, because you have to be able to answer questions directly, not just write it on a test, have a conversation about something. So definitely they were a great base for me. And then after that, to be honest, I picked up so much off the spaces itself. The spaces have been probably the biggest education for me. I've hosted about 5,000 hours of
Wow.
spaces at this point. I've had on everyone from, Bill Ackman to the random, kid on the block. right? And so I've learned from all different types of people, their style of investing, how they go about it, what they recommend, what they don't, who's been successful. And I've just kind of intaken all of that and then figured out my own processes.
Sure. Beautiful. Well done. Well done. I want to ask you before someone gets into investing, where should they start? Is it savings, is it emergency funds, or should we just jump right in?
Yeah, yeah. Emergency fund is always important to build first. Different perspectives on this, and to be honest, I'm very respectful of all them because emergency funds are so different nowadays where stocks are so liquid. There's money market funds that are so liquid. It's a little bit different from beforehand, where it's like, yeah, put, 3 to 6 months of cash inside your bed sheets. It's not like that anymore. So it's an adapting time. But yes, you first want to build up, in my opinion, 3 to 6 months worth of expenses. So figure it out, right? That's where the first thing you should be doing is budgeting before you start investing is budgeting, figuring out what do I need each month to live off of, and based on that, what can I actually afford to invest. Then you take what you need to live off of and you save up 3 to 6 months of it. And right now, obviously, you can earn 5% on that inside of an FDIC insured account. So I don't see why you wouldn't. Go ahead and put that into a place like that where it can make some money for you. Once you have that done, then yes, you can start building your base of investments, starting with the more safe and sound retirement accounts, other areas like that, which obviously are a vehicle as well. Please, if you put money into your Roth IRA, actually invest it once it's inside there. I'm I'm not amazed anymore that people don't know that because I've had too many people be like, "Oh," when I say that to them. So at this point, I'm not surprised. I believe that most people don't understand that, and so please, if you've been putting money in, actually invest it. But yeah, start with the emergency fund, then go to retirement, tax advantage, then go to the brokerage, then maybe it's alternative investments, crypto, real estate.
Okay. So now we have that game plan down, hopefully for all of us. Where exactly did you start when it came to building your portfolio just after the ETF? So you built that base. What are some of the individual stocks that you jumped into?
Yeah, so I have three favorites that I'll cover on the individual stocks, all some of the largest positions that I own. Two of them are very classic names, and then one of them is definitely not a classic name, but it's a company that people have heard of. So the classic names, one of my number one positions, if not my number one, is Google. How are we ever going to get away from Google? Google has been a verb for as long as I've been alive, pretty much, right? Fun fact, I'm actually 1 month older than Google. Exactly. And so like this thing has been around and it's not going anywhere. People actually underrate how powerful Google is. They think about it for search engine traffic, which it's a beast, 90% of search engine traffic, right? 92%. People don't realize how little Bing has and all these other things. Nothing. Google's mastering it. But the big next step here is data and AI. And nobody's better equipped than Google. I understand that Microsoft has these different areas and opportunities at OpenAI, but Google has the largest training set in the world sitting there for them. They're going to utilize it. They're going to become a major player in data. They didn't even have to charge for Bard. Bard's literally free, their AI thing. They just put it out there and it can search the internet for you in seconds. So to me, I look at Google and I'm just blown away. I can see this being a $3 trillion company, easy. How could it not be, right? Like everything is Google. It's so funny to me, what's the thesis for this? Well, go to Bing. The most search term is how to download Google Chrome. You go to their competition and it's how do I get this other thing because it's better than you. So Google for me is just an outstanding company. Number two, also not a huge surprise, but maybe a little bit more of Maverick is Tesla.
Classic.
I've been bullish on Tesla since 2018. So it's come a long way since I first started deep diving into Tesla. I think for me, it drives from a couple of different areas. So it's an understanding that Tesla's more than a car company. It's an AI company. It's a software company. And it's also, to be honest, I have a passionate distaste of driving. I hate driving, absolutely. To me, it's just, I have to focus on the road. I have to not be doing work. I have to like do all these things. And full self-driving with an EV just solves so many problems. I think it's good for the future. It solves my personal problems. It takes a headache off my hands. I just, once I started diving into that, and when I was first researching it, they were so far away from this stuff in 2018. But I had the Goldman research, which was honestly, I think, a big part of why I was kicking in on it because I was going through like LiDAR reports and all right, different use cases and being able to listen in on shareholder earnings calls and stuff like that at a pretty early age. I was only 18. And so I really liked getting a good feel, maybe 19 at the time, I don't know, something like that. I really liked getting a good feel for it. And so, yeah, Tesla just always stood out to me. I actually do every single week, I do a Tesla space. and I bring on the biggest personalities behind Tesla on the internet, or at least on Twitter, onto the space. We had 1,000 live listeners this
Wow.
past week. Thousands and thousands of people listen to the replays, come on every week. It's one of my biggest spaces every single week. I did it the entire year pretty much this past year. And so I'm always talking Tesla. I'm always leaning into it. Again, obviously, Elon and me have somewhat of a connection there too. So that's great. I like accessible CEOs, and I think there's a lot of more things that I could say about it. But the biggest thing that I would say is they're so far ahead of the competition. It's not funny. You look at this past year, look at the stocks and the news and the aura around Rivian, Lucid, any other major Neo competitor to them. It's like doesn't hold a candle to it. So, those first two companies that I'm outlining, I think they blow their competition out the water, and they also have so much room to grow as visionaries. Like they haven't even solved FSD. People don't realize like it's a 600 billion, $700 billion company, but they haven't even accomplished what's really going to make that happen. So yeah, it's a $1 trillion company once they solve FSD. So you're looking at basically 20 to 30% growth, in my opinion, already. And that's just a small amount of where I think it could get to. Last company that I'll put out here, definitely not the one that's on so many people's radars. You could tell me if you've invested in it personally, and it is Celsius. So
Interesting.
this
I didn't
is,
expect this one.
yeah, CELH. If you asked on Twitter, a lot of people have a stock that's associated with them, right? They talk about it enough, they tweet about it enough that when people come onto a space or they come on the timeline, they're like, that is that person's stock. So it's like, maybe, I mean, especially when it's like not a giant mega cap. If it's like a CrowdStrike or a Snowflake, there's people I'm like, yeah, that person, like if something happens with the stock, I'm messaging them and being like, you see this? What do you think? People know me as like the Celsius guy. Like I have been on spaces just banging the table on this company for 2, 3 years now. And I mean, when you look at the stock chart, I think thank God it's kind of borne out what I've been talking about. So there's very vivid moments for me too that are recorded on spaces of especially. So there was a moment where Celsius about a year ago, they had pretty bad reaction to earnings. The company started falling. So I'm just pulling up the stock chart real quick so I can speak clearly from here. But yeah, all right. So this was around, wow, this is all the way back in 2022. Now they've also done a split. So it makes things a little bit more complicated, but, or maybe it was, no, that in 2023 this year, I see. Okay. So the stock starts come down in like March 2023. This was another time where this happened back in maybe March of 2022. And both these times, people are in spaces going, oh, now's the time to sell, take your profit, right? This company's going. But what stands out to me about this company is one, I think that they're in like a perfect niche. The world is moving clearly towards health, these areas. Imagine, look at the numbers of money. Gyms are opening up and popping up these days, and people are transitioning over from certain types of food. And Celsius, they basically are like taking the exact place of Monster and Red Bull, but nobody thinks that Monster and Red Bull are healthy, and they think that Celsius is healthy. So you basically get the effects of Monster and Red Bull while still in your mind thinking, oh, I'm drinking something healthy, right? So it's perfect in that area. The big thing for me that was the catalyst was when they signed a distribution deal with Pepsi, which really hasn't even kicked in yet, to be quite honest. Now it's going to give them worldwide distribution. They were like a small kind of company before that. Now they're huge. I've also had the opportunity, by the way, to meet the CEO in person at a conference, which was cool, and had a little bit of a chat with him. But I look at this, it's taking over places, it's taking over shelves. And the number one thing is every single earnings, they blow the numbers out of the water. They're usually beating by like 100% on all the expectations. So the fundamentals to me are going to look stretched to most people, but they're consistently beating expectations. And the last thing I'll point out on it, the best performing stock of the last 20 years, do you know what it is?
No, what was it?
Number one performing stock of the last 20 years is Monster Energy. This is
Wow.
clear. Yes, Monster Energy is the number one performing stock. This is clearly an
Wow.
industry that has stretch PEs that can grow, and people will still keep coming into that stock. So rest my
What
case.
what what do you think makes it so overlooked? I mean, like I would have never guessed in a million years Monster Energy. Is
Yeah,
it just because it's a boring under the radar type of company here, or I'm looking at the Teslas of the world?
it's interesting, right? They don't do a lot of marketing because the product really sells itself. Because what happens is people go to an environment like a gym and they look around and they see what everyone else is drinking. They look around and see what everyone else is doing, and then they copy. This is what happened with Bang Energy. The reason that they got so big is they basically gave it to all these influencers who took it to the gym, and then all these people saw them on social media. Celsius is really starting to copy that model now. They're starting to get into the right hands. They threw like a party with Kim Kardashian. Now they're basically taking, like, Monster just didn't do a lot of marketing and just was a proven product. And to be honest, they didn't have any competition.
Yeah.
Like, think about it. When you would go, like, what could you really substitute? Because a soda wasn't really a substitute, right? Like a 5 Hour Energy wasn't really a substitute for this type of energy drink. So now you have like three or four main competitors, and I think what Celsius is doing is they're basically differentiating themselves as the clean one. If you could call them the Tesla of energy drinks.
Interesting. We'll have to follow back up here in 6 months, a year and a half, see where they're at. I want to ask you
Yeah.
a question about management, company management, because not just about Celsius or Tesla or Google, right? All phenomenal companies across the board. How important is it for an investor to be, just say, learned or well aware of the management team? Obviously, Tesla's a big one, right? Elon Musk, we all know. But let's take Celsius, right? And another seems like CEO that you had the privilege of meeting. Is it imperative for us investors to get to know or familiarize ourselves with the management teams?
Yeah, no, it absolutely is. And what I'm pulling up real quick is I put out a an email to my newsletter readers this week. Literally, the email was titled "My Exact Process for Picking Stocks." That was what it was titled, and it basically walked through the importance of fundamental analysis, which is, I think, what you're hitting on here. And part of the fundamentals to me are the governance of the company. They're a little bit more qualitative than quantitative, right? But they're still part of fundamental analysis. And so part of this email, which I just pulled up in front of me, I literally break it down. I say there's two types of fundamental analysis: quantitative, which is the numbers based, the financials, and qualitative, which is the intangibles. When it's quantitative, I want to look at the three statements. I want to look at specific ratios that I outlined on them and make sure, this one I want as high as possible, as low as possible, whatever it is. Obviously, you compare to the sector. And then I talked about qualitative, and literally the first bullet point under qualitative is management. It's management, growth opportunities, competitive advantage, customer base, innovation. Those are my 5 areas that I focus on personally. And so it absolutely starts with management. Good management will be the make or break point of this. And I actually was super privy to this personally because when I worked in private equity, this is what we did. We literally went in, we basically targeted distressed assets. So we would buy these companies that were kind of failing, but we thought had good bones. We would fire the boards, and then we would bring in new management, which usually was like the first thing that we did. It was like, we don't care if this company has some of these failing, quantitative fundamentals. We believe that the qualitative is the biggest part here. We're going to get rid of all the people, replace it, and see if we can make this company work. And by putting our own people in place, that's how we turned around a lot of deals. So I've been very firsthand on with it.
Wow, it's very similar to a Bill Ackman approach, if you will, the activist investor there. I'm curious to know your standpoint. So Bill Ackman has, notoriously had a portfolio of what, 10 to 12, now I think 7 holdings within the Pershing Square Capital portfolio. What is the magic number in a portfolio for all of us to aim for? Is it 50 plus? Is it Bill Ackman 7 to 10? What's your gut take on that?
It's not going to be the same for each person, is my opinion. And also, it gets more complicated if you're using ETFs versus individuals, because then you're basically just getting exposure to a bunch more. I think that most people should not be having more than 20. I think is like a good area, like especially if you're trying to like really fully understand each one. 10 to 20 is going to be a range where you can actually take the time. But not only that, like you can keep up with them, right? Like you can keep up with news, you can keep up with areas like that. It's probably a good area for most people, but it's going to differ, right? If one of those positions is SPY, okay, like I don't know if that really counts, Yeah, that's just like a baseline piece right there. If one of them's QQQ, what, you're just going to go and do due diligence in a QQQ every year? No, right? Like those aren't necessarily counting as positions. I think if you're talking like more like individual positions, you don't really want to go more than 15, 20. If you're doing these broad-based ETFs, yes, you can have a larger portfolio of those with an understanding of what's inside of them.
Sure. Now, what are some of the red flag signals that you have, and you will actually raise that red flag and sell out of a position because that red flag goes up?
Fundamentals changing, things changing. I think on a quarterly basis, you want to keep an eye on where these stocks are going. And I think that the technicals factor in too. I definitely was blessed with some of the technical analysts that I was able to bring on my show and interview in the early days that really led to me saving me some money. So, like an example, uh, Neo. So I was an investor in Neo for a little while because I wanted more exposure to that industry, right? And I wanted diversification. I was like, Tesla's great, cool, but I want to have a little bit more in this industry. So I went and I was deep diving on Neo. They had a lot of stuff going for them, and obviously the stock had an incredible run up, right? At one point they were up about 1,000% in just a year or two, in 2020 to 2021, and this is around the time when I was purchasing and getting in and stuff like that. And so for me, though, one of the big things that happened, I'm just kind of looking through straight up like my history so I can see the exact numbers and all these types of pieces. All right. So I can see here on December 14th of 2021, which let me just pull back up this chart real quick so I can see exactly where this is. Perfect. If you look at the Neo chart, you'll see that it peaks in January of 2021. It then has a drop where it drops from around $70 a share all the way down to 30 by the time it's in May of 2021. It then rebounds back up to $55 per share in June, and again back down to about 33 in October, once more back up to 43, and then it started to break back down. You can see when it broke down again and it gave up the lows from 2021, which were right around $30 per share. To me, this was a company that now had broken the technical position, right? Over the course of a year, they've held this point twice, three times, four times. They've now given it up. There's a clear breakdown happening here. The market, you have to look at the market as a whole, right? We started entering into quantitative tightening. We had rate hikes. There wasn't going to be this thing. I sold my entire position. Said I have no interest in sitting here and riding this position down. So I sold the entire position. What's it called? At, gosh, I mean, I have to find what the exact number is, but I think it's probably around whatever. What was it in December of 2021? It was around $35, $36 per share, right? Neo today trades at $8 a share. So for me, I was looking at it going, hey, just based on where market conditions are and the technical stature here, this is clearly breaking. I don't want to stay in this. That's for an individual one, right? For some of these other positions, it could be a massive thing changing. Like, for example, let's say Celsius, for some reason, way, shape, or form, loses the Pepsi deal. I'm going to heavily reevaluate my investment in this company because that's a huge focal point for it. Let's say, I think Tesla has a lot of stuff going for it, but let's say Tesla, for some reason, ran into some roadblock that they could not implement FSD, right? Like the US government will just not let this happen. That'd be a huge roadblock. I think you could say it for a lot of stocks. So I think it's just continuing to keep an eye on why did you actually invest in this stock, right? And then has that thesis changed? But I will note, having a good understanding of technicals, I'm not talking about day-to-day 5-minute candles. I'm talking about, I was looking at this over the course of a year and seeing it break down. That's going to be helpful as well.
Interesting. Now, I have, of course, a dividend investment channel here, so plenty of dividend investors will very well be watching this Masters chat. I'm curious to know what your take is on dividend investing for the young, for the old, for everybody in between. Is dividend investing worth it?
I'm personally not an expert in this area. I have a couple of friends that this is like their love. I have a friend, he has the username at Hero Dividend on Twitter. And this dude, I mean, he's the dividend investor. Like he's the one that I go to. He's the one that knows this stuff. I have another friend, Nick. He runs a very strong dividend portfolio. It's got 40 different names in it, all different types of high dividend quality stuff. For me, it's not something where I think, spent enough time in it to build out a portfolio like that. But I don't think that they hurt. I always like getting dividends. I'm not going to say like I don't like the money, coming out and hit my account and stuff like that, and building up the position. I understand what people are doing there with basically trying to create consistent streams of income, and not so much in the dividend area, but I've been leaning more and more into the yield area on names like QQQY, where they're selling puts, right?
Sure.
On it, they're collecting. So I totally understand that income driven approach. I think for me, maybe I'm more in like a dividend growth area where I'm not necessarily going out and buying like a T-Mobile and some of these names, but maybe I'll buy, I don't know, like what's a good name put here? Like a Home Depot or something like that.
Is a Visa, Home Depot, play like that?
Yeah.
So here's a question I have for you now. I want to ask this one for you. It's the best investment you've ever made because I said, what's very clear to me is you're very knowledgeable on finance, whether it's from Goldman or perhaps back in the day, right back in school. But you really have your head on straight in the right way when it comes to investing and just your outlook. I'm curious to know what you would say your absolute best investment was. Maybe it was in the stock market, maybe it wasn't. What do you think it is?
Yeah, I mean, so stock market, like my best ever percent return on common was I had 1,000% return on Plug Power on common stock, and so like by percentage, that was probably the biggest. On individual position, just going up and making money. I think I had gosh, this was during the meme coin craze earlier this year. I bought a meme coin and made like $8,000 overnight and just like took the profit. And I was like, cool, I'm good. Like, it's not as big as what some people have, but the fact that I was like, holy cow, I just didn't have this yesterday, that was huge for me. But the biggest investment that I would say is the investing in the in-person experiences and not necessarily like there's a lot of fun in-person experiences. Like I traveled all over the world this year, but specifically the conferences has been one of the biggest points for me. I probably went to a dozen different conferences this past year, spoke at a bunch of them. I hosted 4 in-person events at satellite events, 2 conferences where I had huge investors show up to these events, and the networking I was able to do, always paid far more for itself than whatever it cost me to get there. So I think a lot of people they hold back. They're like, I don't want to travel, I don't want to be walking around, I don't want to go to all this, but like you can often do it on a pretty affordable budget for what you're going to go out there and make. So like an example of this, Art Basel. I've went to the last few years. One of the things that convinced me to go this year was last year when I was there, I got invited, or one of my friends was like, hey, there's this event. It's a rooftop party networking thing. Let's go to it. I show up to it. It's kind of late at night. I'm not planning to stay for so long, but I'm like, cool, let's go grab a drink. And so we go to the bar to grab a drink. And I kind of just like bump into this woman behind me accidentally. And I'm like, oh, I'm so sorry. And I'm just like a nice person. So I just like started like talking, make conversation. We're just waiting in line for drinks. Turns out she works for a crypto blockchain. They're super interested in what I do. I get invited to a dinner the next night with their whole company. I end up
Wow.
working around with their whole company. And I mean, just immediately leads to, 5 figures of deal flow. Just like right off the bat from there that I close with them. Cool, we're good to go. So like literally just by showing up to this random external party and talking to people, I was able to close that. One that really stands out to me is I went to an event in Vegas. Well, they flew me out there to speak at the event, and I decided like I really want to like take the people time. So I set up a dinner that I kind of orchestrated with like 5 or 6 other people that I wanted to meet with. I was like, yeah, you guys will all get along. Like, just show up to my dinner. We'll do something together. We have the dinner, and little did I know, but just because of that dinner, 2 of the guys decided that they really liked me, and they ended up recommending me to another firm to basically be an advisor for the firm. The firm had never spoken to me before. They get on a call with me that night, and the guy says, "There's no way I'm letting you go. These guys are speaking too highly of you." And he sends me $20,000 the next week to basically be like a consultant, just because these 2 guys really liked me at a dinner. So I just really impress upon people like show up in person, like go to these things. You don't understand which these opportunities that you can build and how much business you can get done, even more so than online. So and sometimes I don't even fulfill that to the highest point. Like I should have been probably at the NICE on Friday. Like I got invited to go speak to some big managers. I was like, I couldn't wrap my head around it, but like as much as you can do it.
Sure. Now, I have a lot of, I'll say elder viewers out there, right? Probably mid 35, 40, 45 plus, probably because I have the dividend investment channel, right? But I do have a fair amount of younger viewers as well. And I got you're 30, I'm sorry, 25 years old. You're meeting with CEOs and founders and you're going to conferences. Can you speak a word or two to perhaps the younger investors who are out there who perhaps don't have that confidence? What's going to give them that push to get out there and just do X, Y, or Z?
I've been through so many stages where I was like, fake it till you make it. Then I was at, I know everything. Then I was at, I know nothing. Then I was like, I need mentors. There's never going to be like the perfect time and the perfect stage. It just revolves back to what I said in the first place. Your biggest asset is time. Your only regret in life is that that you didn't do it sooner. So whatever you're looking at doing, like try to get to that point sooner than later. Whether it's taking the risk, maybe shelling out a couple of $100s from your own pocket to buy a ticket to go to that conference, right, and making something happen there, when it comes to the investing side, the beauty to it is that there's so much free info now, right? Like just like I learned through my 5,000 hours of spaces, anybody could have come and listened. I actually charged $0.00 to anybody to listen to any of those spaces. I've never charged a single listener to listen to the space ever. So, and I don't plan on doing so. So you can just come in and you can learn for free. So I think it's start absorbing knowledge, start intaking it, start getting to these in-person meetings, and then it's just all going to be about the people that you surround yourself with. I'm sure you know this. You're the average of the 5 people closest to you. The people that I put in my circle have made visible changes on me. Even more recently, I got another mentor who I started a company with together, and I just quickly realized that this guy just had so many of the answers that I've been looking for. He just had a very different disposition about life. And all of a sudden I was like telling him like, hey, can I just throw you in on the Zoom call that I normally would do by myself, pitching this person or picking their brain, but like, I want you there because I want to hear what questions you're going to ask, and just start pulling these people into your life and don't let them go. Like just keep pestering them. And like, sometimes you have to triple text someone or follow up 4 times to get that meeting, but it's going to be worth it at the end of the day. So I'm building my mentor roster. I'm building the people that I know that I can go ask a question to. Like, as long as there's somebody that knows how to do it, you can get in touch with them, you can figure it out. But that's, hopefully somewhat helpful off the bat. It's nothing that's like super actionable right away. But, if anyone has more specific questions, they can DM me on Twitter.
It's great. No, surely investments that will pay dividends, if I may say. Now, looking ahead
Oh,
into 2024 here, or well, actually in
yeah.
2024, but moving on into the year, we're looking at a Federal Reserve that will very well lower interest rates, hopefully sooner rather than later. And it's almost this new game for all of us investors as to when they're going to do that. I'm a big fan of saying macros matter. I'm curious to know how you use macros, if they really do matter for you, and if you can walk us through your 2024 outlook.
Yeah, we had an interesting, zero interest rate phenomenon environment. I think that I would caution people of thinking that just because the Fed's going to cut rates, that that's going to mean the market goes up. In fact, we've seen the opposite historically, is when they start cutting, that's when the market has gone down at that point. So I think you have to just take it really, not day by day, but maybe like quarter by quarter, right? As they go through this, have an understanding that even if they start cutting, they're still doing quantitative tightening. So they're still taking money out. They're still trying to lower their balance sheet. How do all these things work together, right? I'm not an economist. I'm not like a perfect macro person. What I'm going to do is every day go on spaces and ask people questions because I have the right people that can do that. So I would just watch the right YouTube videos, right? Go and find a good blog and just read through. And so it's like, hey, the Fed today cut interest rates. I'm projecting, let's say in March, by 50 basis points or 25 basis points. What does this actually mean for the economy? How should this adjust your portfolio? Should you even be doing anything now? That's the way I'm going to take it. I do believe that that stuff factors in. I think you can put, the day that they started quantitative tightening was basically the top, right? And so you could see that that started to come down. But I want to caution people against having a perfect X happens means Y happens mindset in investing. Because if it was that way, everybody would be rich. And it's clearly not.
Sure. Now, here's an interesting one for you because you're on Spaces. There's a lot of people on Spaces looking for guys like yourself, whether it's others on YouTube, right? And there's just a lot of people talking about investing in stocks and meme stocks and Bitcoin, everything in between. How do we know who to trust online?
I don't know who to trust online. It's a good question. So one of my favorite ways is first off, it depends on what you're trusting them about, right? If you're trusting someone for lifestyle, probably want to look for a fit person, right? Who's like out there. Like for me, my health coach, I hired a health coach. Good decision, I feel like, in my personal life about 4 or 5 months back. Keeps me on pace. We talk once a week, gives me all my, hey, here's what you're going to work out this week. Here's what you're going to eat this week. The dude has a million videos of him benching 350 on his Twitter, right? Like I got on a call with him. And he's big jack swole guy, and I'm like, cool, yeah, like this is the guy, you know. And then other people testimonies about him and stuff like that. For investing, you can kind of do the same thing. There's so many platforms nowadays that people can show verified returns on. So like I have a public portfolio on savvytrader.com. And most of the speakers that I bring on a lot of my spaces have portfolios on savvytrader.com, and I can go in. It's immutable. They can't like falsify it, and I can just see, oh, hey, you did an 80% return last year. Wow, maybe you're somebody that I should be paying attention to. And oh, you lost 15% in a year where the S&P 500 went up 24%. Maybe I shouldn't pay attention to you. Uh, that's, I think, simple ways to go about it. It's like looking for that real life proof. and not just taking people's word. And a screenshot is not proof of anything. So just continue to understand that, right? And have that in mind. Uh, I think that those are good ways to go about it. But then another piece that I've always seen is just look at how other people treat them. Look at how other people engage with them. A lot of these people that ended up getting called out as, fake gurus and people that were just stealing people's money, when you went into their comment section, there were just a lot of mischief going on there, right? A lot of people like, hey, where's my money? Hey, where's this, right? Or what's going on here? And so you should be able to like look at their aura online and look at the writing about them, right? Like recently Forbes did a nice article on me and had a good write up. And it wasn't the fact that Forbes just wrote an article on me. It was the fact that they wrote it about several people. I was one of them, and the company that I was with in there, the names that were on there were so proven names that shed good light. Like I almost rather would have that than my own spotlight article, right? And so go look for people that are being associated with the right company, that are all following the right company, engaging with them. Find those circles, and that's where I think you're going to find promise.
Beautiful answer. Again, always insightful. I have one last question for you, Gav. And again, it deals here in 2024. Hopefully, we do have that bull run coming up sooner rather than later. Now, if I were to give you right now $10,000 to invest into an individual stock, I kind of have a feeling I know exactly where you would put it. But what is one individual stock you would put that 10K in and why?
Yeah, it could go in any of those three, but real quick, I came prepared.
There we
So
go.
we're fun. Yeah, yeah. Tried and true. Listen, I would totally throw $10,000 in Celsius or Tesla right now for the year. But I think that if you want the lowest risk, highest reward, the one that I'm repping, some Google over here, I think would be a great way to go about it. I think they're gonna have a huge 2024. Just great things coming for this company. And they're deservedly near the top of the list in market cap in the world.
Wow. Incredible answers, insightful. Investors, Gav Blacksburg, you got to go check out his Twitter Spaces, a very, very informative investor. Hopefully, you're back on with us soon. Gav, I want to say thank you again for joining us on Masters of the Market. And investors, until next time, we will see you all in the next one.